Hey everyone, welcome back to another edition of Hashtag Ask Rob Cohen with me, James Wild. All good, James?
Yeah, really good, thanks Rob. How are you?
Really good, thank you.
Excellent.
Welcome everyone for another edition. We are going to be hitting you all with your favourites, your data, the intel, what we are seeing on the street, market activity, wider property stuff, wider finance stuff, some headline numbers, and everything that you continuously ask for. Hope you're all well. James, let's go straight into that data. Let's share with everyone what's been happening.
Yeah, thank you, Rob. So this week's data, let's start off with the new instructions. We're at 317 this week, which is very similar to last week. And again, it's following that trend of that early 300s in terms of weekly new instructions, which is really positive in terms of pipeline supply, which enables to fuel the market. In terms of weekly sales, we're at 128 for this week, so pretty positive. We've seen a few surges in recent weeks, up at sort of 160 last week, but generally speaking we've been in the early 100s in terms of sold figures. And like we say, Rob, we've been talking recently about some of the positivity in the market and things that we've both noticed on the street in terms of agents having more properties under offer at the moment and sort of wider activity in the market, which I think is mirrored in the data. We've got 229 properties again under offer this week, which presents a further pipeline for the weekly sold figures. Yeah,
also we've got the prime super prime figures in this week, the monthly totals for October. And I think what is interesting there is that very, very strong figures. So literally the strongest figures since the stamp duty window closed a good 3-4 months ago. So really strong 2 million plus, really strong 3 million plus, really strong 5 million, and equal matching record month for our 10 million plus super prime asset. I think we were well aware that that was going to be happening, especially some of the transactions that we have been discussing over the last period. And as clear as those numbers are, top performing month in 2021 for our friends, Mr. and Mrs. Ultra High Net Worth, buying that super prime property.
Yeah, I mean, it's been a very positive sort of 18 months in the super prime London property sector. And in terms of calendar years, how that data is often represented, in terms of calendar years, we're closing very strongly for a second year running on the super prime sector. I mean, last year, on a calendar year basis, there was many reports in terms of the billions of pounds spent on London super prime property.
I think we discussed in last week's show how Grosvenor Square was performing as one of the top locations in London. And one of the interesting things that we were told, that the ultra high net worth Mr. and Mrs. overseas investor buyer is back in the market. They're doing physical inspections. That 18-month period of challenging travelling entrance into the country has gone. All of the restrictions, virtually all of the restrictions on entry into the country have been dropped. And the last month of this year, where we will see trading 4 to 6 weeks, is going to be strong activity from your overseas investor in that space within the market. And I'm very intrigued to see the kind of transactions that go through, the purchaser profile changing now because of that, and see what the month of November brings in that sense.
Definitely, Rob. And as we sort of move through into 2022, and as restrictions lift, the popular time of year for those high net worth travellers that come into the UK is often the UK summertime. From the Middle East, India, Russia, and those countries. That is the popular time to acquire property. It's when the buying agents are the most busy, and the relocation agents. So some of this positivity we've seen in the super prime sector could really carry through for a third straight year of really strong performance in 2022.
Great, thanks for that, James. What else have you got to share with our viewers this week?
Well, as we brought you news last week of the average property price in the UK surging to over 250,000 according to the Nationwide Building Society, their house price index, the UK property market is somewhat defying the economic indicators and market conditions as we find them here in the UK and on a global basis in the pandemic. And again, as we heard last week, interest rates remain at 0.1%, having done so for a record period of time since March 2020. There has never been a pre-Christmas interest rate rise in December in recent history, so this is going to likely mean that in early 2022 we're going to see that initial interest rate rise, which we would anticipate being 0.25% up to 0.25 on the UK base rate, possibly followed by some other rises throughout 2022. But in terms of when these rates get introduced, I think it's. Do you think it's likely to have a slowing impact? Is it likely to dampen the property market here in the UK, Rob? What are your thoughts on that?
Yeah, I think it's important to share and understand that not every interest rate increase is directly transferable to what someone would be paying on their mortgage rates. So I think although people are concerned that mortgage rates will go up and that could lead to a certain dampening in property transactions in the market, I would say initially that interest rate hike might not be seen immediately through mortgage rates. Where there's maybe 2, 3, 4 increments, then for sure that will impact mortgage rates, but not so much initially with a small increase, a quarter of a point maybe, like you're sharing.
Yeah, okay, and even if the wider economic market conditions do improve, rising interest rates can exert a sort of a cooling influence on the property market, although the impact, like you say, on existing borrowers will be modest, and it'll be likely be those that are entering the market buying new additional properties or looking to refinance. We've seen unprecedented growth in the UK property market over the course of the last 18 months, largely on a more regional basis in terms of here in London, Rob, excluding the super prime sector, of course. So whether this means there'll be a resurgence in the UK, the London property market, we'll monitor this closely in terms of our data, which we bring you week on week in the coming quarters and into 2022. But what are your thoughts on that, Rob, in terms of, it's largely the rest of the UK on a regional basis that have really had the property price growth, and do you think there's any room for that in London, or whether that will impact the market at all? From
our data and what we've been seeing on the valuations that we're doing, especially on new transactions, that data is pretty distorted in the sense that there's been some really strong performers in the London market, whether it's prime, super prime, or the generic market. There's been very, very strong performance in the house market, the wider footprint market, the suburb market, and there's been lesser performance or underperformance in the flat market, the very central market where maybe some of the offering doesn't have that attractive outdoor space, etc. Thus, when you see the mean generic data and numbers of how London has performed at large, it's very flat, maybe 1 point or 2 points. Whereas when you really break that down, postcode, location, asset class, there's a different picture to be told. And I believe that in 2022, those nuances will continue and the positive ones will strengthen, because the mindset and the dynamic of the current buyer is they want a different property profile and asset class to what they wanted pre-COVID. And that will continue for a period of time now, because ultimately a generation has been affected by the pandemic, and the trends have now changed, and those trends will take a year, 2 years to play out.
That's it, and like we brought everyone graphics earlier this year and last year, it's almost like the sort of donut effect. The sort of real central London, excluding the super prime, was one which was fairly static, with those areas, like you say, Rob, those village areas really performing fairly strongly in the last 18 months.
Great, and any other wider industry news to share this week, James?
Yeah, in terms of some of the occupancy rates in the the main hubs, we've got the Docklands, Canary Wharf, the City of London, Midtown, the West End. In terms of occupancy data, the West End remains pretty strong in terms of about 27.3% occupancy in the West End of people actually physically attending the office, which is significantly higher than some of those rates we've seen in the Docklands, which is the lowest out of those three sectors. In terms of many analysts are citing the West End having greater means of accessibility for commuters in terms of rail, tube, bus, cycling, in terms of where people physically live. We did have a spike in COVID cases a couple of weeks ago. They're sort of averaging about early 40,000 cases per day. So hopefully as that remains under control, people are still very comfortable coming to the office. We'll try and keep you up to date in terms of what is happening there in terms of those office sectors.
Brilliant, James. Thanks for the update today. Anything further before I close?
Well, just in terms of the clocks have gone back now as we move through through November. We enter the festive season with Christmas adverts on the television. The popular London attraction of Winter Wonderland is back this year, having not gone ahead last year. It's opening next Friday on the 19th of November 2021. I don't know if you'll be attending, Rob. It is a ticketed event this year, £5 per ticket, as I know that it's sort of the queues along Green Park and the tube stations nearby shut at Hyde Park Corner. So as we get into the festivities, it's great to see some of these events happening. It's great for some of the retailers and shops in that area and sector.
Yeah, I also believe there's a Christmas at Kenwood this year for the first time. New attraction. I will check that out for all the North London residents in that area. I'll have a look and see what that's like and report back. Just again to update and share with everyone, we are back on the road. I am with all of the banks, updating on the market, risk, credit, sanction, transactions, anything to look out for in the industry. Please feel free, if you haven't booked in a session this year, please feel free to book that in and bring all of your teams, your sales, your risk, your credit, bring them all along. We will get that booked in as the bank tour across Europe starts up again with hopefully all of the major issues of the pandemic behind us. And keep sending in the questions, keep engaging online through the socials. We're getting tremendous traffic and volume, especially through YouTube and the podcast, and it's great to just engage and provide this platform for you and hopefully provide great content and value add for you to make decisions in whatever area you are within the property and finance sector. So thanks for that. Book in your presentation as we tour all of the banks. Please feel free to reach out to us at any stage with any questions or help or support you may require. And on the back of that, have a great week. Thank you for following. Truly grateful, really appreciate it. And we will see you all next week. Take care, be safe, be well. Thanks, James.
Thanks very much, everyone.